Ladies and gentlemen, I want to welcome you to the final week of February's analysis session. Now, remember, for you to trade the financial markets, you have to understand what period you're in. So, currently, what I'm looking at, this is the final trading week of the month of February. And there's usually a plethora of activity that we do anticipate for the markets before it does close February and we move on to March. Now, starting off with Sunday, which was yesterday, we did have the Germany federal elections whereby the Conservative Party did win the majority of the votes. And this will have an impact on the euro as we are going to see in the next few minutes before the end of this video. Now, today is Monday, 24th of February. Currently, at the moment, you can see that we do have Japanese yen bank holiday. So the Bank of Japan today is going to be closed along with other several banks in the Japanese sector, whereby we do anticipate there's going to be relatively low liquidity. But I would want to look at USD JPY when New York does open later today. Why? Because if Japan today is currently closed and US is going to be open, then whatever is going to happen in the US economy is going to overpower the Japanese yen, whereby we want to anticipate those liquidity moves before they even do happen. Now, moving on to Tuesday, we are going to have consumer confidence at exactly 6 p.m. This is East African time, whereby this is how this data is usually interpreted. Remember, on the 12th of this February, we did have consumer price index whereby they were looking at how many goods and services were produced and sold in a particular economy. But this one is going to look at the confidence. Like, let's say, for example, iPhone 16s were released. How many people are confident in purchasing that iPhone? Now, if people are going to be confident in a particular economy, this means that investors are going to flock into that particular economy to invest because money is moving around. Remember, money looks for money. So this data is derived from 3,000 households, which asks these people, how do you rate the relative level of current and future economic conditions, including labor, business conditions, and overall economic situation? So the usual effect is actual greater than forecast is good for currency. Now, if this data does come out better tomorrow, it means that the economy is very positive in the near future, whereby people are like, yeah, we want to invest in this economy because we do have confidence in how things are moving. Yeah, Trump is going to make America great once again. Now, moving on to Wednesday, February 26th at 3:30 a.m. in the morning, we are going to anticipate CPI for Australian dollar. Now, this is going to be the yearly release. Now, we would want to see a perfect balance. There's no perfect, but we want to see a balance between high inflation and low inflation, because if an economy has very low inflation, it means the money is not moving around in that particular economy. We want to see a balance between high inflation and we want to see things picking up. The Australian dollar has been in limbo over the past few trading weeks, and we want to see these numbers start to pick up, whereby yes, money has started moving around in that particular economy. So if the data does come positive, this is going to give us further confidence in purchasing more Australian dollar pairs. Anything that has the AUD pair to it, we are going to be buying if the data comes out positive. If the data comes out negative, then it shows us, okay, things are not going relatively well for Australian dollar currently at the moment. So this is going to be Wednesday at exactly 3:30 a.m. in the morning, whereby the early bird will catch the worm. Now, moving on to Thursday, February the 27th, we are going to have GDP. This is going to be the quarterly. Now, this is going to be the prelim. This data is usually released in three versions. So you usually have the advanced, the preliminary, and the final. So this is going to be the prelim, but I'm going to pay attention to it. Also, I would want to see these numbers come out slightly better than 2.3%. If it does come out higher than 2.3%, it means that the United States economy is headed towards the right trajectory, whereby we want to see money moving in and out of that particular situation so that we can be confident in buying the United States dollar in the near future. Now, at the same time at 4:30 p.m., we are going to have unemployment claims. Now, we are not anticipating a very big difference from the forecast. Now, we are anticipating a forecast of 220,000. The previous number was 219,000. Now, looking at only a difference of 1,000 jobs in an economy whereby there's nearly 200 million people, 1,000 is a relatively a drop of blood in the ocean. So, if this number comes out lower, because actual less than forecast is good for currency, because the lesser people are losing jobs, it means the more people are going to be making money at the end of the week. Remember, these guys are paid on a weekly basis, but this is going to be lagging data because If a person loses a job today, you're not going to be broke tomorrow. It does take a bit of time, but it usually shows the trajectory of the economy, whereby we will want to see the United States picking up in the near trading sessions of the upcoming few weeks. March is going to be very active. Seasonality speaking, this is where institutions are going to push the most amount of money. From March all the way to August is whereby we do get the majority of the movement that the year is going to have for us. Now, at the same time, we are going to have core durable good orders. So I'm not going to go into particular depths over each and every of these data release. What is the most important thing for us to do? At exactly 4:30 p.m. on Thursday, you want to be very active in the financial charts, so to say. You have to be looking at your execution. You have to plan your trade your plan. So moving on to Friday, we are going to have the final release, whereby in the United States we are going to have PCE. So this is personal consumption expenditure. Remember, we were looking at consumer confidence, which is going to be released on Tuesday. Now on Friday, it's going to be personal consumption expenditures. Okay, how are people feeling about the iPhone 16? But how many people actually bought the iPhone 16? Sorry. Yeah, we are on 16. So this is the change in prices of goods and services purchased by consumers, excluding food and energy. So actual greater than forecast is good for currency, because if more people are going to be purchasing, that means money is moving. Forex is all about understanding how money is moving in and out of markets. So when you're done with Forex Factory, so Forex Factory is just to help you develop a trading plan for the week, whereby I can know that on Tuesday I need to be looking at the charts at 6 p.m. On Wednesday, I need to be looking at charts at a particular time. Let's say, for example, 3:30 a.m. I need to wake up very early in the morning and trade Australian dollar. On Thursday, I want to be looking at 4:30 p.m. So I'll want to trade the markets after New York Open on Thursday, and then on Friday I'll want to look at how the monthly candle and the weekly candlestick is going to close. Now when I'm through that data, I go to the second piece of data. So this is going to be commitment of traders. Let me show you how to go through this data. Let's say, for example, you start it from the beginning. So you go to cftc.gov. So this is a government website. Now with this data, it's very important to be looking at it, because it shows you how institutions are pushing money in and out of particular assets. In this particular case, we want to look at gold. So when I'm looking at gold, this is the disaggregated so disaggregated means it's going to be broken down into producers, swap dealers, managed money, and other reportables. So we want to focus on managed money. Okay, this is going to be data as of 18th February. So this is going to be last week Tuesday. So this data is going to be updated each and every Tuesday, but it will be made available to the public every Friday. Okay. So every Friday it's going to be made available to the public. So tomorrow it's going to be updated, but it will be made available on the 28th of this month. So how do you look at this data? You can see that ever since, so you want to be looking at the changes. Okay. So the changes is the most important thing. You can see from February 11th to February 18th, we have seen, so this is long positions, this is short positions. Okay, so you can see we have a net long of 222,538 net long positions and 37,000 short positions. Now if institutions are buying, then they start off loading position. So this is whereby you need to be very keen. You can see that there is negative 6,536 position negative. So negative means that they have offloaded 6,000 positions from 222,000. So last week this data was like at 228. It was like 229,000, somewhere around that region. But as you can see, we have offloaded quite a significant amount ever since 11. Now if you go to the charts, let's say you are looking at gold, let me clear this chart so that we, so ever since 11, you can see we had this massive sell-off, then a short-term retracement, and then a massive sell-off. So this is what it means when institutions are offloading positions. Okay, we were net long on gold, but it reaches a point whereby if institutions are buying, they need to sell. So if they offload massive positions on gold, you're anticipating that prices are going to retrace. At this particular point, this is my point of interest here. Bears took the window, bulls took the stairs. Okay, so this massive sell-off shows you that the institutions have started offloading positions. You can see this is from 11. So from 11 to 18th of last month, of this month, sorry, institutions have been offloading positions. You can see how prices have been struggling to push to the upper side, whereby at the moment I don't think 3,000 is going to be very likely. $3,000 an ounce, I don't think it's going to be very likely in the next few trading sessions. But I would want to see prices coming back down to this region here at 2,878, which is a good tradable range. This is somehow like nearly more so 700 pips, of which that's a really good decent amount of tradable range that we can be executing on the marketplace. Now if I was to execute on this particular asset, I would want to wait for prices to come back to these highs, all-time highs that we did create at 2,954. So if you do get a candlestick that breaks to the upper side but closes below, I would want to look for selling opportunities on gold moving to the downside. This is what I'm trying to say. So a short position here, stop loss maximum of 100 pips from the all-time highs, and then TP1 is going to be these relatively equal lows at $2,921 an ounce, but TP2, my final take profit should be around 2,878, of which this is a very good tradable range. This is a risk to reward ratio of 1:7, whereby if I'm risking 1% on this particular account, I am targeting anything above 7%. If I was trading a prop firm, that is really good in terms of risk to reward ratio, whereby if you do scaling in this position nicely, you may pass a funded account in one trade. Now, moving on, you have to look at both scenarios. So this is going to be on the H1 time frame. This is all dependent on how the market is going to close above this region. So if I do get a candlestick that closes above this region, then the sell opportunities are going to be invalid. But if I do get a candlestick that breaks these highs but closes the below, then I'll look for such a setup like this. But I'm leaning more towards selling opportunities on gold because of commitment of traders, whereby we are seeing that more positions are being offloaded. Yes, there is potential Trump tariffs that the world currently is in limbo about. People are skeptic about the tariffs that Trump is going to impose on us, but it is for the better of the United States economy. Looking at this data moving forward, personal consumption expenditure, CPI is going to be better. Retail sales are going to be better because of the impacts of the tariffs that Trump is willing to impose on other countries, because he does believe that if you're making iPhones, the biggest consumers for iPhones need to be the American people. If we are making Teslas, the biggest consumers of Teslas need to be the American people. We don't want to import vehicles from China into the United States economy, impacting our own local development. So when you're looking at forex trading, you need to ask yourself, like, where is money most likely to flow to in the near future? That's all about analysis. When you're looking at this analysis, ask yourself, okay, with all the data that I'm digesting, where are we likely headed to? So right now, currently, fundamentals are playing a very big role in terms of where the markets are supposed to head to. Let's say, for example, in this particular scenario, I'm anticipating that we might see a huge sell-off on gold this coming week, and I'm very prepared to be on that bandwagon selling gold to the downside. Now, GB euro dollar, this is what I'm anticipating. The market did open with a gap on this particular day. So the market did open. The data was very positive. As I mentioned, they did have euro parliamentary elections, if I'm not wrong. It was Germany federal elections. I don't believe that's the same as parliamentary, whereby I think the opposition did take the vote. And look at how the markets interpreted that data, whereby we did have a very nice bullish movement to the upper side, whereby the markets did gain at least 50 pips in less than 3 hours, but immediately started retracing back to the downside. Now, this is the region whereby I want to be very interested in. The same thing happens. How this candlestick is going to close in this region is going to influence my trading decision on this particular scenario. So if I was to remove this, if I do get a candlestick that closes below this region, this will give me further confidence of selling. Okay, Candle closes are very important. So if you do get a candlestick that closes below this gap, this will give me further confirmation that prices might continue moving to the downside. But if this candlestick rejects this region, okay, whereby it tries to break these lows but closes above, then it will give me confidence to start executing more buying position on euro. Remember, we are looking at a stronger dollar, so everything currently that I'm going to look at this week is going to be majorly in the side of the dollar. So I'm going to look more on the selling opportunities compared to buying opportunities on euro USD. Now GBP USD and euro dollar are positively correlated, meaning if this one goes to the upper direction, there's an 80% chance the other one does follow suit. So we can see that we have this massive rejection, but this candlestick that has 12 minutes remaining has started to fill on those inefficiencies that we have below this region. Now we do have a fair value gap around this region here. Okay, I want to see how the market is going to react also on this particular region. My analysis is usually very simple. If we do get a candlestick that closes below this region, more selling opportunities, of which that is what I would anticipate for GBP USD, meaning, but if we do get a candlestick that rejects this region, comes back down to retrace, then I'll look for further buying opportunities to the upper side, but I'm leaning more towards selling opportunities. So this candlestick, so if I was to look at this 4-hour candlestick, it has like 11 minutes remaining for it to close. So if this candlestick closes below 1.26237, then it will give me further confidence that markets will continue selling. Judging by how this candlestick closed below Friday's high, this shows me that there is much more selling pressure compared to buying pressure on this particular asset. Now moving on to BTC Bitcoin. So we do have this trend line that I've been looking at for quite a while. This was 18th February, this was 21st February, and we have been bouncing on that. Now I want to see Bitcoin come back to these highs. Not these highs, I usually like looking, when I'm looking at highs, I want to look at the bodies majorly, because wicks can be manipulated, but the bodies cannot be manipulated. So this is a trade that I'm looking at currently in the moment. Now everyone is pro bullish at BTC, and there's no need to fight the trend currently at the moment. So I am in a position currently at the moment with BTC USD, and I'm anticipating that there's a high likelihood in the next few weeks, let's say less than a month, 2 months, we might be coming back to all-time highs on BTC USD. Now Australian dollar against the United States dollar, I want to see, we do have their CPI coming out. So price action for this asset, I'm going to leave it currently at the moment, because the data is going to depict what we are going to do. But currently at the moment, whenever you see the markets presenting equal lows before news releases, this acts as a potential price magnet for prices to come back down to this region. As you can see, this was Monday open, whereby we did open with a gap, and the markets has made relatively equal lows. So whenever you have equal lows in the market, this is a region of liquidity. I want to see, so if the data does come out positive for Australian dollar, which I'm anticipating for it to come positive, I want to see this market come back to this region, have a rejection, and then finally a further continuation to the upper side when the news is released on Tuesday. I do believe it's going to be on Tuesday. It's going to be on Wednesday at exactly 3 a.m. in the morning. So this is why it's very good to look at these data, Forex Factory, look at TradingView, look at all tools in your within your arsenal for you to make informed decisions. Now NZUSD was very favorable to us last week, and I'm looking at a selling opportunity whereby we do have our first touch, our second touch. I'm anticipating a third touch on this region here for a further continuation to the downside. Now I'm not going to look at GBP JPY currently at the moment, because today is a holiday, and but I would want to look at USD JPY when New York opens. So this was a trade that I was in last week. Let me remove it. So we do have relatively equal lows around this region here. the lows that was formed on 24th December. Look at how the market did break below these lows, but currently we are in that region. So if I'm looking at price action such as this, what I liked to do is identify this region here from these lows to these highs, and then if the market does close above either region, as you can see we have inefficiencies around this region, it may give me confidence this is going to be a scalp, whereby I would want to look for long positions, might take profit just above that region. But if we do get a candlestick that closes below this region, then I would want to sell this asset. My stop loss just above this region. I can target a 1-to-1 risk to reward ratio on this particular trade. I'll be very happy with it. So this is like targeting, how many pips is this? Like targeting 78 to get like roughly 80 pips. Stop loss to get 80 pips take profit, of which this is really good. Moving on to WTI. So seasonality speaking, seasonality speaking, whenever you're looking at assets, you need to ask yourself, like oil. Right now in the United States of America, there's a lot of cold weather. It's the peak of winter currently at the moment, and supply and demand, seasonality speaking, there is usually a greater demand for oil currently at the moment in time, whereby they do use a lot of oil to heat up their homes, um, drive their diesel trucks. Right now, diesel has a higher demand compared to petrol in the United States because of, technically, seasonality speaking. They use a lot of oil to heat up their homes. So I want to anticipate prices of oil coming to at least $72.8 a barrel in the next few trading sessions, next few trading weeks. So it can be anything 1 month, 2 month, but I want to see prices of oil really picking up currently at the moment in time. So that's going to be the analysis. Take care of yourselves. Be blessed.